Welcome to the Daily Update, where I'll go over the action in the market for Thursday, June 29th, and then we'll see how things look for Friday, June 30th. You can probably tell by my voice, I picked up quite a bug. I'm going to do what I call a condensed version of the video. All of the charts that I've been talking about will be available in the PDF, but what I did is I went through all those charts and picked out the ones that I think are telling us something right now. I'm also going to be editing this instead of just doing one take, because I've been sneezing about every 30 seconds for the last 2 days. All right, what happened? Well, we had an up day, but it wasn't the mega caps that led things higher. It was more of the broad market. It was more of the cyclicals. It was more of the value stocks that really started to catch fire and show some improvement. We are seeing some improvement overall on our daily charts as well, and in some other areas of the market, and I've tried to pick out the charts that I think you would find interesting for that. Before I get started, this condensed version, what do you think of it? Do you like it better or worse? Do you want me to keep doing what I was doing before? Do you like it if this video is a little bit shorter? I purposely make the videos longer because I want to weed out all the folks that want a 3, 4, 5, 6, 7, 8 minute video because they're just looking for quick answers. They want to be told what to do. Where the people that watch these videos, you really study the market and you really want to see what's going on internally. And so I purposely make the videos longer to weed out a lot of folks. But if you like this idea of a shorter version of the video, let me know. If you don't have any opinion, fine. Don't have to express anything and I'll just go back to doing what I was doing before. There is a PDF that you can download in the description below the video. I do have a private Facebook group that you're welcome to join. There is a new poll that has been posted. I will be going over the results over the weekend. And then I'm keeping a real close eye on YouTube comments. I want to get rid of the garbage comments, and I've been doing that. But if you have something you want to say, by all means, feel free to interject it into the comments. I also provide you with my email address. If you want to contact me directly, feel free to do that. And also know that not only do I post videos on YouTube, but I also post them on Rumble. One area that I'm going to skip for right now is when I go through the intraday action, and I'm just going to go ahead and go to the market comments, where the broader market did do well in Thursday's session. Economic data that came out was taken as positive. Remember, we're going through a phase right now where good news is good news. 23 banks passed the Federal Reserve's annual stress test, but we have to ask ourselves, does it even matter? Silicon Valley Bank passed their stress test, and look what happened to them. Small caps were able to break above resistance, and they showed a lot of improvement on Thursday. Cyclicals, the stocks that go up when the economy's doing better and down when the economy's doing worse, they had a good day, and value stocks outperformed growth stocks. The financial sector, which has just been getting hammered lately, as well as the bank ETF that we follow and the regional banks, they had a good day on Thursday. The S&P 500 is just below 4,400. We closed at 4396. The MOVE index and the VIX are diverging from each other. Now, the MOVE index is still kind of new to me, and it's only been out for a couple of years, so I'm still trying to figure out how to interpret that. But we usually see them going in the same general direction. Now we're starting to see them going in opposite directions. On an intermediate term basis, we're still concerned about our oscillators. It takes longer for them to move, and so they're starting to turn more negative. And then we have the Sean trend meter, which has gone extreme positive again. The dollar was up and interest rates were also up. Now, both of these could have really added some headwinds to stocks, but they didn't do that on Thursday. We still have all of our yield curves that remain inverted. Sentiment is extreme positive. We're at 80 where we had been at 79. Our trend is positive, but the green line is still declining. Even though it's on top, the ADX is still below its moving average, so it's a weakening trend. Our bias is positive with the up day, and our momentum now I've switched over to mixed. What about the economic reports that came out? We had the third estimate for the first quarter of GDP, even though it was an estimate. And this is the third time we've seen this number. It did get revised up to 2.0. That's good news as being good news. They had expected it to come in at 1.3%, which is what we saw last time. The GDP deflator was revised down to 4.1%, where it had been at 4.2%. Weekly jobless claims also fell down to 239,000, where they'd expected it to be at 266,000, about what we saw for the last 2 weeks consecutively. Continuing jobless claims ticked down to 1.742 million, and I have a chart to show you. Pending home sales did drop 2.7% on a month-over-month basis, much more than the 0.8% decline that they had expected. Last time it came in down 0.4%. So here is the GDP. That's the blue line here, where it's above zero, but it is declining, and then the deflator is pretty much flat right now. This is another look at inflation. When we look at personal consumption on a year-over-year basis, people are consuming more, so that's going up. That tends to be more positive for the economy. Exports continue to advance, which is also good for the economy. And then real GDP is actually going up a little bit into the first quarter of 2023 from the last quarter of 2022. Here's a look at pending home sales. I didn't put a title on here. We're a tick down slightly. We're still seeing some weakness in this area, down over 20% overall. Weekly jobless claims, where we had been around 264, 265, they really dropped off, showing some strength in the employment situation. And the continuing claims continued to drop off and were below the moving average. Here's when we take all three of them together. The blue line is the continuing claims, the red line is the initial claims, and then the black line is the unemployment rate. Next week, we'll be getting the employment situation report. Then looking at our trend, we're just a little bit below the moving average. The green line is on top, but it is declining. Here's the daily chart showing how we're staying above the August 2022 highs, and now it looks like we're at least trying to bounce up off of that level. On the bottom, you can see where volume was below average. We're also looking at overhead resistance with our 20-period double and triple exponential moving averages. We have not been able to break above those. Here's the part that's kind of interesting, and some people are taking note of this. The transports are really showing a lot of improvement and could be getting ready to break out. We're still seeing some overall weakness, though, in the utilities, which could help the S&P overall. Then here's another look comparing the Dow and the transports, where we're seeing this red line really coming up. They're still underperforming, but showing a lot of improvement. And this could also bode well for the economy, because people, things, animals have to be shipped from one place to another. And if these companies are doing well, that typically means the economy is doing well. So what's our outlook then for Friday? The technicals are positive and showing some improvement. This will be the last trading day of the week, month, and quarter, so it could be a little crazy. You've got a lot of money managers that might be jockeying things around. As far as the economic reports coming out, we have personal income and spending. This is a big one. This is the other big inflation gauge that the Fed likes to look at, the PCE price index. Consumer sentiment will come out with the final reading as well. Geopolitical events. We're keeping an eye on Russia, which also now includes Belarus, just to see if anything really crazy develops there, and that might bleed over into having some impact on the market. But so far, the markets are still fixated on inflation and interest rates, which the growth concerns, at least this week, are starting to subside a bit. Now, that could always switch back, but with the economic reports that came out this week, it's showing that the economy is holding up fairly well. Looking at the Stock Traders Almanac statistics, we're pretty much neutral across the board for the Dow, S&P, and NASDAQ, so it's a little bit tilted toward the positive side. Here's where we're coming into the latter part of June. This will be the final trading day, which is the 21st trading day, where we tend to finish June off on a pretty positive note. Also, keeping an eye on the NASDAQ. It tends to perform well going into the middle part of July. So our scenarios. We can't really go with the down one right now because things are turning more positive and starting to show some improvement. You could go with the positive one, but the green line on the ADX continues to fall. And we're definitely not going with the sideways trend for right now because both our short-term and longer-term ADX are suggesting that we are in a strong trending environment. So the warning signs. The parabolic SAR continues to be negative. The BPIs are diverging when we look at other indexes, but the S&P BPI, it was actually up a little bit. The VIX is still showing that there's not a lot of fear. The cumulative new highs and new lows for the NASDAQ continue to show weakness. The 3-month yield is still above where it was back in 2007, right before the beginning of the great financial crisis. Earnings season can be either positive or negative. Looking at some positive signs, we do have seasonality and setups that remain in the background. The long-term special K on the daily chart, it's looking positive, where the weekly chart is looking more negative. The long-term equity put-call ratio is turning more positive. We're still going down with that overall ratio. The Pring bottom fisher is still generating a buy signal. The S&P remains above the downtrend channel upper line. We're far away from that, so I haven't been showing that chart. we're still in a risk-on posture. The Dow transports are improving and may be breaking out. Lower price levels, not only in the S&P, but in other indexes, may provide support if we start to fall. So far, the support has held. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100 continue to break out, but we still have overhead resistance. The NASDAQ was virtually unchanged, with the NASDAQ 100 being down slightly. Semiconductors were a little bit weak. That's about as much as I could tell. And the staples to S&P 500 ratio continues to decline, which can give some good support to the S&P. The mid-caps generated a recent golden cross, and small and mid-cap growth is still hanging in there, looking positive overall. So our conclusion, the S&P is positive and showing improvement. Now, please keep in mind that this could all get wiped out with a significant down day on Friday. In the short term, we're turning positive and showing improvement. Intermediate term, we're still positive, but looking better. Long term, we still remain positive. Thank you. I hope you found this helpful. Please let me know what you think of this. I hope you have a really good day, and I will talk to you again in the next video.